Hi there, Frank here for premium members for the trading day of February 27, 2025, a Thursday. There's a lot to discuss here, so let's jump right in here. Indexes first. There are potential failure tests here within the range. This is right now a hunch that this market will revisit the 6150, perhaps even higher. Perhaps the bearish selling is over and the market is buying up what's available. If you share this opinion, which is just a hunch right now, then you can look at these long signals developing on the shorter time frames, intraday time frames, and plan to participate based on your trading plan perhaps after the open. It's 6:25 a.m. Eastern Time right now. NQ. Pretty much the same thing. Bottom tails, green candles indicate that this could be a turning point here. You see, so I'm carefully choosing my words because there's no setup here at this point. So if you just want to follow the REMEC methodology, which is trading the reemergence of momentum out of consolidation areas, then on the daily time frame, there's no setup. This is a sideways market. But if you think that this market's next potential or probable journey will be to the upside, then that's perfectly fine. All you have to do is look for pullbacks on the shorter time frames, which is what I'm planning to do. So I hope this makes sense. The shorter time frames, 15 minutes, 60 minutes, depending, might give you excellent trading opportunities today or perhaps tomorrow. However, if the bullish advances fail and we break below this, then of course the long trades are off the table for now. So this is how I think about these things, and YM is next. Volatility compression, a potential failure test, impossible not to notice on the 4-hour chart, and what could be a bull flag on the weekly. Based on this, I have a bullish bias going into this session. Same thing as on the other three, actually, because the RTY, which we're going to look at now, is also giving us slight subtle clues that this could be the end of this selling. So there are no guarantees, but we are used to working under conditions of no guarantees. That's what trading is all about. We are quite comfortable with no guarantees, and we are playing the probabilities. And also, we shift sides flexibly and without emotions if the market gives us messages that our thinking was wrong. That's how it works. Let's move on to currencies. 6E first. I still think that this is a long setup here, waiting for a breakout, which means that this last gasp of a short signal should be ignored. If it breaks down, it's a new ball game, but I am expecting a bullish breakout. Now, if you do expect that too, then the next question is, how are you going to structure a trade based on this potential opportunity? And the way you're going to do that is, well, several ways possibly. The way I'm going to think about this is the first pullback after the breakout. So if you've been with me for a while, then you know that I often mention that I'm not a big fan, or an expert for that matter, in trading breakouts. I'd rather wait for the breakout, watch it happen, and then wait for the first pullback. And that's my expertise, trading the first pullback after the breakout for a 1R. So this is how I think about it. Also, there's no trigger. If there's no trigger, there's no trade. So if this breaks down, if this volatility compression breaks down, that's perfectly fine with me because we're not in a trade. You've heard this so many times, but if these are new to you, then just think these over and make notes and make it part of your plan if you do agree with them. All right, some other setups here. The similar setup actually on the Swiss franc. You see, same as on the 6E, pretty much. Same story, same plan. And let's look at the New Zealand dollar as well. Not much happening here. If it triggers later, we're going to look at it, but right now there's no action item here. Okay, on to precious metals. So gold is playing around 3,000. Now this could be a turning point. Look at this bottom tail. If you see signs that there's no more selling, then this could be the beginning of a move to the upside. Again, how and when you enter is really up to you. This is a consolidation. We're waiting for the reemergence of momentum out of consolidation areas. This consolidation happens to be horizontal, but that makes no difference for us. This is a consolidation. The next move is likely to be to the upside. That's our expectation. Since we are flat and we're only going to enter on a trigger, if we're wrong in our thinking, it absolutely doesn't matter to us emotionally or even rationally. All right, so what are we going to do? If you think that this market is likely to make a next move to the upside, then in this session, same way as on the indexes, for example, you can wait for some kind of pullbacks, some kind of consolidations here, and look for re-emerging momentum. In other words, long signals on a, let's say, 15-minute chart. Beautiful. Now, this idea will become invalid if we break and close below this level on the daily. Other than that, I think we're heading for 3,000. Okay, let's also look at the SI, which, again, there's no setup on the SI strictly speaking, but there is a hunch, and there are always signs that the market gives away about itself. One is a potential failure test, and it looks like one right now because we are moving away from this level. With these bottom tails, this is not a bear flag that I'm interested in trading anyway, so I'm expecting a failure of this bear flag, which means you can look for long setups or triggers on smaller charts. So probably I would be looking for some kind of long setups on a, let's say, 60-minute chart, something like this. So this is what I'm looking at this morning, and let's see what happens. We'll be back soon, and until then, mindful trading.